Alrighty. Good morning. How's everyone doing today? The key is to not log in, J Money. Just don't log into it. That's what that's my recommendation this morning for your 401k. Just don't log in. Good morning, everyone. How's everyone doing? Hope everyone had a good weekend, good Friday. Sorry about not being here Friday. Was in Miami for the F1 Grand Prix. What an event. What an awesome event that was. That is a must go every year. So awesome. If anyone likes F1, if you're in the States, I would definitely recommend to at least go once. It is a really great event. They put on a really good show. Really good race. Awesome track. More than anything, just an insane event. I mean, it was like a car festival. If you like cars, if you like racing, just all around, just a really great time. A lot of people and very hot. That's the only downside, but they really can't control that, right? Very hot, Florida sun, and a lot of people. But that was awesome. So back on track. Back Monday, 8 o'clock, live stream. Let's get it started. Let's get it going. I saw all the famous people in the pits, but I had turn one seats, which ended up being, I think, the best place to sit. A lot of action at turn one. I would say if you're going to go, turn one's probably the place to be. Really big DRS overtaking zone and just a really aggressive turn. Seems like a lot of the drivers took that turn very aggressively, so that's definitely the place to be. All right, so Friday, I'm going to quickly share with you guys I know I wasn't here Friday in the live stream, but always providing insight when I can in the chat. So I'm going to go ahead and show you guys what we were sort of looking at on Friday. I provided this before I left for my trip. And sort of what happened Friday was pretty textbook so I'm going to pull up this chart. This is the chart that we shared on Friday, and pretty textbook stuff. So Friday or Thursday, we saw that, right? That big FOMC bounce. We all saw that huge move on FOMC, but where did it reject, right? It rejected right here at this triple top, and I sort of said I would not be bullish until we are above this 13.5. There's just no reason to be, and you guys we saw this big rejection and this very clear bottom that needed to hold on Friday, that 12,800 level, right? That 12,800 level that needed to hold. In the commentary, I was just saying that if we see a move under that 12.8, we should see 12.5, which is the next level on the daily and weekly chart. Do not get trapped. Do not get trapped in this fake upside. You are not bullish on this market until that 13.5. That's how it is. The levels are working. The levels are showing us where the rejections are, and we cannot get trapped to upside. If we move quickly to the upside, you can move just as quickly to the downside. You guys know that I talk about that all the time. If you have a quick move to the upside, the reaction will be equal to the downside, and that is exactly what we saw. We saw that 12.8 break, which got us right back down to 12.5. I'll show you guys that from Friday. So you can see we got that 12.8 break, and it brought us right down to 12.5 early morning Friday. Sort of chopped around the rest of the day, but you can see that now we are sort of continuing that move. On the ES, you had a very similar situation. You had that 41.20 level that needed to break, that had to hold, and it did not. And after that 41.20 break, you guys can see we moved right back down to that 40.50 where we're at right now. Right? You guys can see it right here, right to that 40.50. And that is the exact level that I talked about here. Excuse me. That 40.50 level. So Friday was pretty textbook. Here were some of the scenarios I laid out for the group. We can see that there was really 4 scenarios that could work out on Friday. It was either the 2 bullish scenarios here or the 2 bearish scenarios. And the scenario we got was this exact one on the bottom. This scenario was exactly what happened. We got a push lower, a pushback higher on Friday, back into the 41.20, and then now this morning we are at this level right here. So levels continue to work. You have to trust them. You got to continue to come here to the live stream or continue to, get your levels set up for the futures, because they just continue to share the story for us here. And today we are going to get new levels for us all to look at. So let's do that today. So today is Monday, May 9th. Let's go ahead and get started. So futures, as always, we'll go ahead and set up our levels again. Set up everything that we like coming into today. What downside do we need to watch? What upside do we have to watch for rejections? Let's continue to structure our days with key levels that the market continues to respect. That's really what I continue to go into every day thinking about. So here's the economic calendar this week, guys. We have some really important economic news this week, which could cause more downside or could cause a little bit of a sympathy bounce. We'll see what happens. I'm not in the business of predicting what the market does. I trade what's in front of me, and I trade the levels. So today, wholesale inventories, consumer 1-year inflation expectations. This could be interesting at 11 o'clock today, guys. So 11 o'clock today, we have inflation expectations. We have to see what these are. Are they higher or lower than the previous 1-year inflation expectations and 3-year? You can see the 1-year 6.6% and the 3-year 3.7%. Those were the previous expectations. What do they come in today? So we need to watch that at 11 o'clock a.m. Eastern time. After that, not much tomorrow. The big day here is Wednesday. Wednesday's huge. Consumer Price Index, CPI data. This is very, very important. So 8:30 on Wednesday, guys. I would be very cautious of swing trading anything into this into these numbers on Wednesday. This is going to be very crucial. So 8:30 before open on Wednesday, we got core CPI. Watch out for that. That is big, and I think that is a market moving event, right? This should have some pretty real influence on where the market moves. So we'll see that on Wednesday. We'll see what happens. Thursday, just our normal jobless claims, and that's really about it. So all eyes are on this Wednesday, CPI data. That is the event of the week to watch out for. So we have that. Make sure we're aware of that. Earnings calendar this week. I think we're sort of leaning out. Not much going on for the earnings. We have some more smaller companies reporting, and we'll see how they report. But this week we have a few more that could be interesting. Palantir this morning. What is Palantir doing this morning? Palantir down huge this morning. Wow, 7.8. Yeah, guys, just small caps. No love on the small caps, guys. Palantir down once again. But Palantir this morning down. Upstart, AMC, just a lot of small cap, high valuation, really not profitable companies that I have no interest in. You guys got to stay away from these stocks. That's really my main recommendation, is to just stay away from these names for the most part. If you want to be consistent and not be looking around at every single small cap stock to try to find opportunity, I stick to the large caps. I trade the large caps. I think it's the best. I think the large caps are the best to trade options on. A lot of liquidity, consistent moves, clear technicals, follows the futures. Just a lot of you can be consistent and be repeatable on the large caps. On these small caps, it gets a little bit more difficult. So you got AMC, Plug, Upstart, Clover, Tattooed Chef. Lemonade should be interesting. LMND. So we'll see those today. Peloton, crap. Sorry, but it is. Workhorse, gone and forgotten about. That was one time a big company. Everyone was hyped about it. No long. What is Workhorse trading at these days? 2.8. Wow. $2 Workhorse. That was at 42. Crazy. Yeti, Fiverr, Krispy Kreme, Wendy's, Nothing really, guys, that I'm very interested in. Disney should be interesting. Wednesday after close, that's something I'll watch. Rivian, you guys saw that Ford is selling their share in Rivian. So that's ugly for Rivian. Dutch Bros, Beyond Meat, BYND, Sonos, Bumble, Six Flags, nothing, guys. Nothing really. Affirm, I guess, is interesting in this environment. So the only ones that I'd actually be interested in is maybe Roblox, Walt Disney, Affirm, really, Upstart. Those are sort of big ones. Coinbase is below 100 for the first time in its company's history, trading under $100 this morning. So a lot of small caps, a lot of questionable names here this week. I'm not going to be following any of these earnings, but make sure you guys are aware. If you have any positions, make sure you are aware that these are the earnings this week. So that's that. All right, so let's go ahead and go over the rest of the schedule that we have on our docket here. We have a Tesla channel break this morning, which is a very important channel break to watch out for. This is going to be I think, a very good opportunity. What do you mean Motorola point is good? Yeah, Motorola. I just got my new Motorola yesterday. Big Motorola guy. So Tesla channel break, watch out for this. This could be a nice trading opportunity today. Facebook gap fill. As you guys have seen over the last week, Facebook's been holding up pretty well. And I don't think Facebook can hold up in a weak overall tech market. And I think this is an opportunity. So Facebook gap fill, it's still there from their earnings report. And I think Facebook could move lower into that gap fill if the rest of the market moves lower. I don't see a situation where Facebook can hold up if the NASDAQ is slipping as hard as it is. So we have to watch Facebook for this gap fill. I think this is a cool opportunity. I would watch it. Nobody streaked, yeah. Amazon. So we talked about Amazon consistently on this channel for the last few weeks, and I've showed you guys the gap in volume on the volume profile. If you come here to the live streams, you should remember me sharing the volume profile on Amazon, and there is little to no volume between $2,700 and $2,000 a share. And I talked about how it should be a very quick move to the downside. And it is happening. So you should watch Amazon again. If the NASDAQ's weak, Amazon could have more downside. Amazon is down $65 a share in the pre-market, which is pretty incredible. Watch out for Amazon to that $2,000 level. You're only about 200 to 300 points off now. So that's only that could be, that could happen this week. You could get 2,000 on Amazon this week. So I would watch Amazon in this volume profile gap. It's a very small amount of volume here. I will show it again today. Nvidia, 180. This is a huge level on Nvidia. If I see a break and retest rejection of 180 today on Nvidia, I will definitely be interested in playing that to the downside. Shopify, talked about this all last week on the live stream, post earnings. They had terrible earnings. And I think Shopify still has room down to 300. So I will share with you guys that 300 level on Shop. Walmart. I was early to Walmart puts. You guys know I had Walmart puts. I got stopped out of them because Walmart held up 1 day more than I expected. And now looking at Walmart, the trade would have been absolutely gorgeous. So unfortunately, sometimes you're just a little bit off. You're a little early to a play, and I will share with you guys my my play on Walmart, how I had to get stopped out, and now looking at it, obviously it looks very nice, but at the time, I have to stick to my rules. I had to stop out of Walmart. It was holding up, and that's trading, right? That is trading. That's something we need to live with as traders. You could be wrong. The timing could be off. Your idea could be absolutely spot on, but if you get the timing wrong, you have to take your loser, and that is what I had to do with Walmart. Apple. If you come to the live stream, you know that I'm a pretty big Apple bull. I have a lot of shares of Apple. I love Apple long term, but I have been saying over the last few weeks that I think Apple needs to move back to 150, and I still am standing strong behind that. I still think Apple has room to 150. I still believe that we need to see that downside back towards that next support level, which is around $150 a share, which I will share with you today. Finally, we will look at the Roku bear flag that is forming. During the last market downside, pretty intense market downside, which happened back in January. That is like this area here, sort of January, February. Really more January, early January than sort of mid-February, early mid-February. During this time, my key focus, I don't know if anyone remembers, was playing downside on the really crappy stocks. That was like my every day. I'd come into the day looking at the crappy stocks: Roku, Peloton, Etsy, Coinbase, all these sort of questionable names. Really, all the names that Cathie Wood buys, to be quite honest, thinking about it, which is just mind-boggling. And I want to see if that trade comes back in, because we had a lot of upside, sort of fake upside on some of these crappier names off of earnings, and now with the market weak, I think there could be more downside. So Roku gave us a pretty big push last week off of earnings, and now it's creating a very big bear flag. Is some of this upside that we saw off earnings, temporary? And can we play these back to the downside after an earnings pop? Roku is one that popped on earnings, but I just don't see how Roku can hold up in a weak overall tech market. So I'm definitely watching Roku today on a very big bear flag. So watching that, and I'll share it with you guys today. After that, we will look at the tickers that you guys want to look at. One second, I forgot to update that for you guys, so I will do that real quick. Let me just go ahead and get you guys the Google Docs for everyone to work on today, so you guys can fill in the tickers that you want to look at. So I'm just going to quickly do that here, and then we will get started. So today is 5:09. All right, so let's go ahead and share that. If you guys are a member of this live stream, the channel, if you press the join button down below, you will get access to this document that you can put your tickers in, and we will look at the end of the live stream. So I just posted that right now, so make sure to go check that out. All right, cool. Let's do it, guys. Let's prepare for today. It could be a very nice day to the downside. I feel like this is a good opportunity today. We're down. The only concern I have is how much we're down in the pre-market. Does it sort of affect the opportunities that we have here intraday? So let's just go ahead and start with a fresh NASDAQ. Let's just go ahead and run this all fresh. Let's delete everything, and let's go ahead and take a look at what's going on here. So let's start on the daily chart. A few daily chart levels that I'm watching here today, guys. Now that we've broken down and made new lows, I am watching the lows of this pivot right here. This is right around 12.2. I'm going to call it 12.2, 12.200. Is right here, guys, and this is a level that I am definitely watching today. I think you could see move to the downside towards 12.2 this week. I absolutely think you should. I don't see why the NASDAQ would hold up anywhere before 12,200. That is a low here of March of 2021. That is a previous high here of November, of October, and really of September. We just had a little bit of a pop through. So I think the NASDAQ should see 12.2 this week, if not today, maybe tomorrow. It would be surprising to see it today, because that would be a 4% red day. And, it's possible. We've seen 4% red days in the past. But 12.2, guys, that is a level that I believe you will see this week. I don't see why the NASDAQ would hold up anywhere before this key level here. There's nothing to say, hey, here's the key level that it's going to hold. You might get some sympathy bounces along the way, but ultimately, I think you need to see 12.2. That is the level that I will be watching on the larger term time frames on the daily chart, 12,200. So with that there, now let's go ahead and break it down to the hourly, and let's look at what happened last week, because it really is quite. I don't want to say it's easy, because nothing is easy in trading and nothing's easy in the stock market, but it really is quite understandable with, if you really just focus on the levels that's going on here, it really is quite understandable as to why we're getting downside, guys. There's two reasons, right? There's the technical factors, and then there's the macroeconomic. There's nothing good going on in the macroeconomic environment. There's nothing good for growth stocks. You have high inflation, you have you got the ramping. You're hearing more about Russia, Ukraine again, which is interesting. I High inflation, interest rates are rising, Fed funds rates increasing, and you're getting some Russia-Ukraine again. That's nothing there. Nothing that I just said is going to cause markets to move up. It's just not going to happen unless something changes. Something has to give. Until something gives, I think you continue the trend that you have been on for a very long time. You have been on this trend for basically a month now. For an entire month, you have seen lower lows and lower highs. And until this breaks, until this changes, I would not look for upside. There's just no reason, really. You're just, your mind is playing tricks on you. You got to trust the direction that we are moving in. And the direction is to the downside. So, you have a rejection. You have a rejection. On the FOMC statement, when Jerome Powell talked, you moved right into that level. Now, if you guys are in my Discord chat, or if you are, or if you're not, but if you are, then you know that I did not trust this move one bit. I did not buy a single call. I warned everyone to be cautious here. I was very undecided on this move. I did not take any actions on this upside. I stayed relaxed. I watched the chart. I didn't let FOMC take over my emotions, which is very easy for newer traders. They see upside. They hear Jerome Powell. They get into the whole Powell pump, all the Powell stuff that you hear on Wall Street Bets and all over the internet. It's very easy to get trapped into that type of trade. And that is not something that I have any interest in doing. That is not being someone that's traded for a long time, guys. And I've been around the block of, the hype. I've been part of it before. I've fallen victim to that type of hype many times. And I could tell you that it is not something that you really want to get wrapped up in. So this move on Powell, I did not trust one bit. I talked about it in the chat nonstop. And I would say it's just a textbook rejection, guys. I mean, look at how clean that rejection is. There's really nothing else I could say besides look at where we stopped and look at where the market tanked off of. And it's just perfect. 13,550, 13,5, an absolute textbook rejection. Thursday, we fell back down. We came back down to the channel lows, and we broke the channel lows Friday morning. And you guys can see what happens when you break the channel lows. There we go. So if you ignore the emotion, if you ignore the hype in the market, if you ignore everyone going crazy, if you just looked at the charts on Friday and on Thursday, if you just looked at the charts without knowing what's going on, without getting full of emotion, you should have known that this was going to reject. So it's very textbook, very clean. You're getting your slip this morning. I think you come down to 12.2. You could very easily see some type of sympathy bounces here today. That is one thing I will caution you. If we go to the 15-minute chart, so we can see right here on the 15-minute chart, you probably could get some sympathy bounces. I would say you could see a sympathy bounce into this 12.5 area today, right here. That's where I would look for a sympathy bounce on the market. Probably a bounce into this 12.5. Maybe you even bring it up to like this 12.6. I would say this whole area. 12.6 to 12.5. I'm going to put a 100-point range on it, guys, because it is Monday, and we need to give things a little bit of breathing room. So I would look personally today, I would look for a bounce into this 12.5 or 12.6, right? And then I would see, do we start to reject in this area? That would be sort of what I'd be watching here today. 12.5, 12.6, you're down 2.5% almost in the pre-market. That's probably a good reason to see some type of upside at open, maybe short covering, maybe some, just overall sympathy to the upside after a big drop. If I see any of that, right, am I going to be someone that buys calls because I see an early morning pump to the upside? Do I get, oh my God, full of emotion, the market's going up, I'm buying calls? No. The market is still very down, and a push into 12.5 today, guys, is not anything that changes any type of move. That does not change anything. So if you see a push into 12.5 this morning, a sympathy bounce into 12.5, I would be a put buyer off the rejection, not a call buyer into supply. So please understand that. Push into 12.5, 12.6, look for the rejection. If you get over 12.5, 12.6, do not get excited if you get into 12.8 either, guys. This is Friday's levels. You could reject off this as well. So there is really not any reason to be excited for upside until you see a break over this level. Until you see a break over 13.5, you do not get excited for any type of upside because there is nothing real about upside here until a break of 13.5. And still at that point, you still have so much room to go. But really, that's the first thing you'd have to see. But if you don't even see that, you could get a very clear rejection of previous support here. Look at this, right? You still have this previous rejection at 12.7. You could get a fake push into 12.7, and then we sell it off again. So, moral of the story, guys, please watch the levels. Please do not get excited about upside. I don't see the reason to. I'm not very bearish typically, but this is just, the levels are just working out too clean to get trapped in this market, guys. We don't want to be, if you come to my live stream, I don't want to see any of you guys get trapped in this market. That's really a sincere it's really sincere. I don't like when people get trapped because they're not paying attention to levels. If you get trapped in this market, you're trading off emotion. It's really as easy as that. That's how you would explain it. So 12.5, 12.6, first rejection point. If we get past that, you're going to 12.7. There's your next rejection point right here. And if you don't even see upside today, you're coming right down to 12.2. If you don't see any upside today, you're coming right down to 12.2. Those are your three scenarios today, guys, right there. Jot them down. Prepare for them. Here are your three scenarios on the NASDAQ. Either straight downside to 12.2, a push to 12.5, 12.6, rejection, or a push to 12.7, 12.8, rejection. Those are your three scenarios. That's what I'd be watching today. All right? That's the NASDAQ. Let's go ahead and jump into the ES. If we go to the daily chart on the ES, we will see the same exact thing. Actually, you know what? Let's go daily first. Let's look at the big level that I'm watching. And then let's break it down further. So, here's the daily chart on ES. Now, what levels am I watching on the daily chart here on the S&P 500? The first one is this low from May. You guys can see right here, that is 4,030. That is the low of this May ticker, or this May, Brad? My name is not Brad. The low of this May candle is 40.30, and that is where the ES is attempting to hold this morning. It is trying its very best to hold on to that 4,030 level right there. If you do not hold that level, you are coming back down to these next previous rejection points, which is around 39.50. Right, you guys can see right here. Here are some previous highs, 39.50, 39.50. I think that is where you come down to if you break the 4,030 today. Okay. Oh, Brad Finn in the chat. Oh yeah, Brad. Me and Brad are friends because of Rangers. New York Rangers. Go Brad. Go Brad. Go Rangers. What's up, Brad? How are you? So 40.30 and 39.50. Watch those two levels on the daily chart. If we go to the hourly, we're going to see the exact same thing as the NASDAQ. Where did the S&P 500 reject after Jerome Powell? It was a perfect rejection. 1, 2, 3, 4. Boom. Move to the downside. Perfect rejection at 4,300. You guys can see we cracked under 4140. We moved lower. And you guys can see right here that we are at that 40.30. So today, there's a few scenarios that I would watch. Let's go to the 30-minute chart. Here are the scenarios that I would look for on the ES today. I would look for a sympathy bounce off of probably up into this 4,100. I would look for a sympathy bounce up into this 4,100. Right around here. Here's scenario 1. Scenario 2 is you get a bigger push into that previous low, 41.40. All right, you get something like this. Scenario 3 is you see a break of 40.30 and you just pretty much get downside today. That's really the scenario 3. Maybe you get a break, a retest, and then a downside move. Those are really the 3 scenarios that I would be watching for today, guys. Sympathy bounces, up into key levels, rejections, or just straight downside, maybe a retest and then a downside move later on. That's what I'd be watching. I would be surprised to see the ES get above 41.40 today. That is a 2% move to the upside after being down 2% in the pre-market. That would be a pretty astonishing day. If it happens, that's incredible. But I think that is a low. I think the probability of seeing a move past 41.40 today is very, very low. So push into 4100 rejection, 4140 rejection, or just downside retest of 4030 and then a continuation in rest of the day. That's what I'd be watching. Okay. Dow Jones. I'm probably not going to go too much in depth on the Dow because I think you should just be watching the ES and the NASDAQ, to be quite honest, but I will quickly go over this. We got to get into the other stuff. It's 8:30 already. I don't like to go past 8:30 on the futures, but you guys can see we're sort of at this low right here. I would say if you break this 32.2, that is going to call for more downside. You guys can see it right here. If you break this double bottom, you're probably going to move back down into like this 3150, 31.5, 3100 area. Right around here. You guys can see 31.5, 31.6, 3100. So watch out for that 32. What is the low of this candle? 32.167. 32.167. I'll show it to you guys here on the 4 hour. You can see it right here. Little double bottom. 32.167 here. If you break that 32.167 today, I would look for that slip down towards that 31.6. Okay, Russell. Yeah, I mean the Russell's just doing the old stair step to the downside. More downside today. Rejected that 1950 area last week. You can see right here the little double top rejection. Boom, double top rejection, and more to the downside. If we go out to the daily chart on the Russell, let's get a little bit more time. I think the Russell is moving down to 1700 personally. That is where I think you need to see, because I just don't see why. If you look to the left of this chart, guys, I do not see why the Russell would hold up anywhere in this area. There is no type of support in this area here. This is a vertical move to the upside. If you move vertical to the upside, you should move just as quickly to the downside. So I think Russell probably comes back to this 1700. That's what I would be watching. It might take some time, but that is sort of the area that the Russell probably needs to come back down to and retest. Sort of giving up this straight up move. Okay? So guys, to recap the futures for you, please trust these levels. Please watch these levels today. They continue to reject. They continue to show us the exact story of what's going on. If we go to the hourly chart, we will look at it once again. Perfect rejection last week. If we retest any of these previous support levels, I would look for a downside. That's what I would be looking for today. Ideally, today, my ideal situation today is a morning bull trap. That is what I'd like to see. I'd like to see a morning bull trap. I'd like to see upside in the morning after a big red pre-market and trap some bulls and then play the rejections. That would be a perfect day, in my opinion. That's the most clear day, in my opinion. Okay, Tesla. So, what is Tesla doing? Tesla is channeling and it's stair-stepping, right? You're getting stair steps on Tesla, and you guys can see it right here. So, right here, guys, you can see stair step 1. You can see right here, stair step 1 and stair step 2. You have a stair-stepping pattern. You have a stair, right? And then you step down. Next stair, right? And then you step down. So, if Tesla continues to stair-step down, it should be a move like this, right? You should see a breakdown like this. You see this breakdown? This got us into the next channel. So, is today the next breakdown into the next channel? That's what I want to be watching today. If we do step down and we break into another channel to the downside, Where do I think Tesla needs to move to? I've been saying this for quite some time. I think Tesla needs to move down to 760. 4-hour chart, I just don't see why Tesla would hold anywhere before this previous double bottom, this previous resistance into support. I think Tesla needs to come down to 760. That is where I think Tesla should be at. It should be trading there. You have this previous double bottom. I don't see why you would hold up in this little gap. There's really nothing here to prove to me that there's going to be support before 760. You might get some sympathy along the way, maybe 800 bounce, psychological level. But there is a gap here that looks like you could see something like this. Move down to 760, and then your next channel builds, right? That's sort of what I'm looking to see. So you get a move to 760, and then does the next channel start to build here on Tesla? If we break this down a little bit closer, let's go to the 30-minute. Here's the one thing I would watch today. You guys can see we are breaking the lows of this channel right around this 850 level. I would look for two things. Either a push back into 850 and a rejection. That's the first thing I'd be watching today, right? 850 rejection, previous support into resistance, or the lows of these candles right around this 830, sort of in this 830 range. From the lows of this Thursday candle, that's what I would watch. So if we break it down to the 5-minute chart, we can see that we are already this morning, showing rejection at the 830 level. Now, why are we showing rejection right here at the 830 level? What is going on at 830? Why did Tesla just move back to the downside here in the pre-market? Well, I am under the belief that it is rejecting this previous low right here. You have some lows here. This is on Thursday of April 28th, Thursday, April 28th. And I believe that Tesla is doing a break and retest of this previous low. And if you go to what it's doing right now, you can see that right here at this green level I marked out, you are starting to find rejection. So Tesla either rejects off this 830 today, or maybe you get a push into the 850 and a rejection there. So those are the two levels I'd watch, 830, 850 for rejections. You're either going to get an intense, if you reject this 830 low, that is a very intense rejection. Let me go ahead and get more time for you here. Here we go. Okay. Let me just explain this one more time. You can see the previous lows from Thursday right here. You are rejecting it right now in the pre-market. If you reject this 830, you are going to see pretty intense downside. If it does not reject 830, then maybe you get a push into the 850s. Okay? That's what I'd watch. Facebook. It's loading 180 days on the 5-minute. All right. Facebook. So, guys, what happened recently on FB? What happened recently? You guys can see right here, we had a gap up on the daily chart. Why did we have a gap up on the daily chart? We had a gap up due to earnings. We had an earnings gap up on Facebook between right around this 192, 193, and 181, right? You can see right there, gap on the daily chart. Why? Because I guess Facebook had better than expected earnings. It really wasn't great earnings, but it was not as bad as they thought, right? I think that's really all it was. Facebook had not as bad earnings as expected. So you got your push higher. Now, you guys see the NASDAQ, right? You see the NASDAQ just making lower lows and lower highs, the tech market getting pretty beat up. Do I think that Facebook holds up in this market regardless of their earnings? No, I don't. I think Facebook should move down with the market. That's what I'll be watching. Now, the only caveat to playing something like that, playing a stock that is strong versus the overall market, is you can definitely get it wrong and it can be very difficult to manage. So I would say be careful if you look for the Facebook gap play, because it has seen some resiliency versus the overall tech market, which is sometimes hard to manage. But you can see there is a gap here, and I think that Facebook probably wants to come down to fill that gap. If you break under 192, you probably move down to the 180s. If the market really starts to take a hit, then you maybe break these lows. So you got your earnings pop. I think you fade it. The only thing that I'm going to say is that if a stock is showing relative strength versus the overall market, it can be very difficult to trade. That is my only concern that I will give you. So please be careful on that type of trade. But there is definitely a gap here. You can't see it on the 4-hour, but it is right here. And if you move into that gap, I think you're going to start to move down with the overall market. So, Facebook, I would watch it. I would watch it today. Okay, Amazon. What am I talking about when I say there's a lack of volume here in the volume profile? Well, here's Amazon, right? This is Amazon on the weekly chart. And you guys can see that from April of 2020 to August of 2020, Amazon went straight up. And these are weekly candles, guys. So each candle is a week of price action. That means that Amazon went pretty much straight up for like, what is that? 4 months, that's like 16 weeks. 16 weeks, just vertical. Consolidated, and look at what it's doing now. So, if I pull up the volume profile, and I show you this one more time, right? I was talking about this when Amazon was trading around 2,700. Now it's at 23, so it's down 400 points from the point we started to talk about this. Look at the volume profile between 2,700, 2,800, and 2,000, right here. This area has no volume, little to no volume. When a move is straight up, it should be the same reaction to the downside. I think Amazon moves down to 22,000, maybe 2,100. I think you definitely have it in it. It's going to probably try to retest these previous rejection points, maybe this previous shelf here around 2,100. I don't know how long it takes. It could take this week, it could be next week, it could be the week after, but I just don't see why Amazon holds up before 2,100. That is the level that I will be watching. You can see it on the volume profile. It is very obvious. Look at this void in price action. It's a big void. And you can see that if we move into it, you're going to move lower to that 21. So Amazon, void of volume in the volume profile. Void of price action here between 28 and 21. I would look for more downside there. Nvidia. Okay. Let's turn this off on Nvidia. Let's go daily. Let's get a little bit more time here. Let's go 4 years. There we go. Okay. So, what is Nvidia doing right now, right? Nvidia is stair-stepping, just like Tesla. You have this, you have this channel that has been built. You have a channel that's been built over the last, let's just say, 2 weeks between 200 and 180, right? Couldn't Amazon low volume mean there's also holding the position versus offloading? My understanding, I wouldn't look too far into it. My understanding is that if there's a lack in volume profile, it's going to be a quick move in either direction, right? If it's to the upside, it's going to be quick. To the downside, it's going to be quick. There's just no structure. There's not a lot of people that are holding shares in between those levels. Not a lot of people that are trading in between those levels. It's going to be, my best way to explain it is think of a vacuum in space. It's going to be a vacuum in space. It's going to be very quick. And that's I've seen it countless times. So it's happening right in front of you on Amazon. So Nvidia, you guys see this crucial 180 level, right? This is a monster level for Nvidia. It has to hold. You can see right here 180 and 180. You are trying to hold this 180. If you do not hold this 180, guys, if you see a little break and retest to the downside today, there is nothing here under 180. Look at the price action that's under 180. Look, there's no structure. It was straight up. If you move into a straight up move, you are going to see a very similar reaction to the downside. You are straight up between 160 and 180, not much structure. And if you break that 180, I don't see why you would find any support in this little gap. You guys can see this price action right here. If I zoom in on this, this price action right here, 3 days of straight upside. a few days of consolidation, and then 3 more days of pretty much straight upside, you are not going to find much structure or much support in price action that looks like this, right? Maybe you see maybe you see structure, when price action looks like this. Let's say, for example, you are up and then you come back down. This is some pretty important structure, right? You can see a lot of consolidation in this area, right? But when a price action is just straight up, for example, this is a great example right here. Why did Nvidia move so quickly to the downside here, right? Market was weak, that's one. But the second one is, look how quickly it moved up, right? You can see it moved straight up. Over 5 days, Nvidia jumped 25% in 5 days. And why did it move down so quickly? Because who's here? Who is the buyers that are buying this move higher? Do you think they're going to bag hold their stock when it moves back to the downside? No. They're going to be the first ones out the door. All right? These people right here, first ones out the door when they see this moving back to the downside. So, basically what I'm trying to get at, guys, is that if you see a break of 180 on Nvidia, I think you're going to see 160 come in. So watch out for 180 breakdown today. You can see it's trying its very best to hold on to it today. What I would look for is something like this, a break of this morning's lows. I would look for this. I would look for this. If you start to reject here, I would look for that 160. All right? That's what I would look for today. Wait for the confirmation. Just because it's traded under 180 today doesn't mean it's going to go down. Wait for the confirmation, the trade confirmation. Look for a rejection. Look for lower lows, lower highs. But that's what I would watch. Shopify. So, I posted last week on Shop that I'm not going to waste your time to find it, but on Shopify, if we go to the daily chart and we get more time here, there is not much of anything on Shopify until $300 a share, right? This is 300 right here. This is a bottom at 300. This is a bounce at 300. There's really nothing here until 300. So I am looking for Shopify back down to 300. You can see right now we're sort of trading at this 360, and we have this 300 level, which is sort of staring me in the face. So I think Shopify goes to 300. That's something I am watching this week. I'm looking to see, does Shopify have another ugly day? They had very bad earnings, and I think there is potential more downside. I have a very interesting video coming out about my trade on Shopify and some things that are very interesting about that trade. If you guys watched Shopify on Thursday, I'm not sure if you guys were, but we were watching it in the Discord chat. And so I was waiting to try to play Shopify on Thursday, and I never played it because it kept on bouncing intraday. And I have it all sort of, I'm gonna edit the video, and show what we were talking about in the chat at the same time. And we were saying in the chat, someone is buying Shopify up. There is someone buying a crap ton of Shopify shares, and it just continues to hold regardless of what the NASDAQ was doing. If you guys watched Shopify, it was a very interesting thing going on Thursday. You could visibly see the buying holding Shopify up intraday. The NASDAQ was falling straight down, and Shopify was moving higher. This is not common. And what we were saying in the chat is we were saying, I wonder if Cathie Wood is buying Shopify. We literally said that intraday. I wonder if Cathie Wood is buying Shopify. And later that day, when you get the ARK updates about who is buying, what did ARK buy that day, the day previous, you can see what ARK was purchasing intraday. And just like we said, ARK bought like 100,000 shares of Shopify on Thursday. And you could visibly see them buying the shares. Before you even got the alert of knowing that Cathie was buying it, you could see it on the price action. You just continued to see Shopify bounce as the market was weak. And this day was Cathie Wood buying Shopify shares. And that is why Shopify held up on Thursday. Now, coming into Friday, I didn't believe that it would continue to hold. I traded shop puts this morning, ended up making like $6,000 on them. I'll make a whole video on it. And what an insane trade that was. I talked about Shop nonstop, and what a beautiful trade it was. It held up Thursday because of Cathie Wood, and boom, the next day, straight down. So basically what I'm trying to get at, guys, is that it was held up artificially on Thursday. And that is why I did not believe that it would hold on Friday. Big bear flag. Look at that breakdown. I still think Shopify needs to move down to 300. I would be watching more downside here on Shopify. What an absolutely interesting trade that was. I've never really witnessed anything live like that. We were literally saying in the chat, I think Cathie Wood is buying Shopify right now. And it sure was Cathie Wood. It was crazy to see. All right, so next, Walmart. So guys, you know I took Walmart puts and I did take a loser on them. If you guys are familiar, if you're in the chat or if you just watch my YouTube, or if you stay up to date with the live streams, I took a loss on Walmart puts. It was back on Thursday. Sort of Walmart pushed back up on Thursday, Friday, and I had to get out of them. It was holding 152. I wanted to see it drop under 152. So why did I think it would drop under 152? Because this was a previous all-time high, and I saw it starting to push and reject. And I was just early. I was a day early to it, and I got stopped out up here around 154, 153. Now you can see if I held on one more day, obviously this would have worked out, but that is trading. I had to take my loss, and I had to move on. So if I go to, let me go and pull it up where I got out. Right here, guys. So as you know, I share all my winners, all my losers. Right here, closed Walmart for a loser. Right here, had to close it out. 150 put. I got in right here. I took it on the second. I saw the 152 rejection starting coming in. I took the puts because I thought, hey, if it's rejecting 152, I think this should move lower. Took an $80 loss, and now you can see that would probably end up being a very nice winner. But Walmart worked against me. That's trading. I had to get my loser. And now you can see it moving down. So my opinion still stands. I think Walmart needs to move down to 146, and I would watch that, guys. I would watch Walmart down to 146. You dropped the all-time high, previous all-time high. I think you need to move down to this 146. Okay, Apple really quickly. I'll show you why I think Apple needs to move to 150. Overall tech weakness is obviously here, and Apple has a shelf sort of at this 150 level. Previous low right here, back from February and March. So I think if Apple goes, if Apple needs to move, I think Apple needs to move back down to this shelf right here around 150. So I would be watching Apple towards 150. You guys can see my opinion is that you need to retest these lows, right? And then try to bounce off that or break it and move lower. But I just don't see why Apple would hold up anywhere before this little low here, before these resistance levels and these resistance levels. So I would watch 150. Okay? And then finally, I will share with you guys the Roku bear flag, which is very apparent here on the 4-hour and hourly chart. You can see Roku sort of rejecting these previous, it's not perfect, but it's pretty much there. It's all in this little range right here, around 100 and 102. You guys can see we had a previous low here, previous rejection. You rejected it again. You got a big push here on Wednesday because of FOMC, guys, but you just don't trust that type of move, right? This candle is a BS candle. This is a fake out candle right here. You can see a big candle here on the 4-hour. Why did it move up like this? This was all off the back of FOMC. Does FOMC change how Roku is doing as a company? No. There is no correlation between FOMC and Roku. And if you move lower after a push like that, you should expect the same reaction, right? Roku is still a company under a lot of pressure. And that candle, due to FOMC, that got harshly rejected on the overall market, it's going to give it all back up. So you can see we giving it back up. You're rejecting here around this 100. You have a very clean bear flag here on the hourly chart. You guys can see right here. Test, test, and test. You have a very clear bear flag here. And I think that Roku should trade back down to their earnings levels. Right here. I think Roku should trade back down to its pre-earnings levels. So I think Roku probably starts to slip towards the 84. That is something that I will be watching today and all of this week. All right. That is what I had for you today. Now we're going to get into what the members want to look at. And if you guys could take 1 second out of your day, just literally 1 second, it only takes 1 second to press the mouse button. If you could take 1 second out of your day today and press the like button on this live stream, that would be fantastic. If you enjoy the live streams, if you come here on a daily basis, there is no reason why you should not be pressing the like button to help me grow this live stream. I very much appreciate it. Thank you guys for all the support, for being here. It means a lot. It really does mean a lot because it helps me continue to grow the channel, and that is the best way to, support the channel, is literally a free press of the like button. So thank you guys so much. Let's go ahead and jump into it. I already went over Tesla, so whoever put Tesla in the Google Docs, please know that I already looked at it. So just rewind the live stream. It's the first stock we looked at today. I can't go over it again. It's just we're on a time limit here. Okay, Dollar Tree. Dollar Tree, yeah, I mean it's a good stock for a type of market we're in, right? Dollar Tree continues to outperform in this type of market, and it's pulled back a little bit, but it's true. Dollar Tree is a safety play, and it does hold up pretty well in a pretty difficult market. So you're pulling back now, and my best guess for you, or my best opinion for you, is to watch for this 50 SMA hold. That is what I would watch. I would watch the 50 SMA hold, but I would wait for a break. If you're looking for upside, I would wait for a break of this little pivot high, right around this 166. So I go to the hourly chart, and I look at this chart. You need to wait for a confirmation of upside, right? You need to wait for something like this, or you need to wait for a break of around this 170. So I wouldn't just buy, I don't just buy pullbacks until I don't just buy them because, it's pulling back. I wait for some type of confirmation. So I would wait for either a break of this 166, or I would wait for a break of this 170, pullback, and then look for the opportunity. So I like the pullback that you're seeing on Dollar Tree. I like the 50 SMA hold that's coming in, but just wait a little bit. Wait for it to show you that confirmation before jumping in. That's what I would say. UPS. Yeah, I don't know if you guys are familiar, but we've been watching UPS off this support here, and this is interesting. You guys can see right here, but this is the same story as Dollar Tree, right? You have the support hold that's starting to show itself, right? You can see that we are holding the line, right? We are holding this line, previous support, and you're finding support again. Now, what do you need to wait? What do you need to wait for? You got to wait for some type of upside confirmation. You can see the support that's holding, but you do not have any type of real confirmation yet. If we go to the 4-hour chart, right, we can see we're still in a downtrend. Even though we're holding this level, you are still in a downtrend. So you need to wait for at least a break of 186, and preferably, if I was to take a trade like this, I need to wait for a break. If I'm actually if it's a long-term upside play, I need to wait for a break of this. To be honest, the margin's just not quite there. If you're trying to guess here at this low and trying to play it into 186, it's possible, but the downtrend's still too apparent. I know the hold is showing, right? I know there's a hold showing here on the daily chart, and it does, it does look good, and it does, pique my interest. You can see support, but if you're buying upside here, you're just playing into a downtrend, and I would just be cautious doing that, guys, in this market. So this is a monitor to me. This is sort of a watch. I wouldn't say this is a play that I would get into right now for calls. I would just watch and see if it does hold, but as of right now, guys, downtrend's still too strong. Datadog had earnings last week down to 105. I don't really see anything here. It's just a downtrend like everything else on this market. You can see you're starting to reject this level. If we get more time, this is sort of a choppy trade. You can see we're sort of at these previous highs, aren't we? Yeah, we sort of we rejected those previous highs pretty perfectly, actually. So you can see double top here, rejection. And you can see if we go to the 1-hour chart, look at where Datadog rejected here. rejection, rejection. You can see we rejected twice at 118. Why did we reject at 118? Who asked that? I'm not sure what you mean. Rejection at 118. You can see it right there. Why did it reject 118? Well, I'll show you right now. If we go back to the daily chart and we go and get more time, where's 118 come into play? Right here, guys. Right here. Where does 118 come into play? Right here. Rejection, rejection. This is why daily chart's so important. Why did Datadog reject right here at 118? Well, it's because of that daily chart double top. So I would be looking for downside off that 118. XOM, yeah, very interesting, guys. On Thursday, XOM, we had a pullback on the futures, on the oil futures, which I did not expect, which was interesting. You guys can see the futures are even pulling back this morning, down 2.5%. We did get the flag breakout on the /CL on the oil futures, but we're sort of pulling back a little bit. Doesn't mean that the oil moves over. You can see that XOM is pulling back a little bit today. You guys can see right here, you're sort of in this channel. So, right here, guys, look at this. You are in this channel above previous highs here. So what I would watch for is a hold. You really want to see this $89, $90 level hold. You want to see this previous high right here hold as support. So if you see a breakdown of 89, then I would say you start to slip. But I would look for that 89 hold, this 90 hold for more upside. Finally, Boeing. Boeing had that push off that 143, guys, if you remember. But overall market's just bringing it back down. You guys can see a little bit of a bear flag. You're coming right back down. This is a huge level on Boeing. So I'm not going to play it here because it just looks too weak now. I did like the push, but what did I say that I needed to see Boeing push over before jumping in? It was around that 157, 160. So this is a huge level at 143 on Boeing. Watch out for that breakdown. The reason I was waiting for 157, 160 on this push, guys, again, just a textbook rejection. There's just so many textbook rejections out there right now. Look at, why did Boeing stop where it did, guys? Someone answer it for me. Why was it not smart to buy calls before this level here, right? Why is the smart thing to hold off until a break of this level? It's pretty damn clear, right? You can see just a perfect resistance, resistance, resistance. And where did Boeing stop? It's at the exact same level. So I can't stress the importance of waiting for a continuation, waiting for breaks of key levels, waiting for the market to show you guys the direction you're looking for. I just can't stress it enough. If you got into Boeing here before waiting for the breakout, you probably got hurt on it. You have to wait for confirmation and breakouts, higher lows, higher highs. If you are looking for upside as of today, guys, you have to wait for breakouts of key levels to give you that confirmation, because there is going to be plenty of upside moves that fail at previous rejection points, just like this one. An absolute perfect example of why you need to wait for breaks of previous resistance is Boeing right here. Perfect. All right, guys, that's all I got for you. I hope that helps you today. Today, I would look for bull traps in the morning. I would look for upside early morning. You're down 2% on the NASDAQ. I think you are good for a morning bounce. I'd be very surprised if you didn't see anything. I'd be pretty astonished if you just saw straight downside out of the gates. That's something that you don't typically see on a 2% red day pre-market. So if you get any type of bull trap, please do not be the 1,000 people that are in this live stream. I would prefer if 1,000 people that are watching this are not the ones that get trapped in a morning bull trap. Please do not get trapped in a morning bull trap. Look for where the push goes. Wait for those key levels to come in. If they start to reject, you guys know what to do. All right, guys, that's all I got for you. Press that like button before you head out. Subscribe to the channel. Help me get to 50,000 subs. And I will see you guys tomorrow. Go Rangers. LGR. Tonight's a big night. Put in a prayer for the Rangers for me. Thank you guys so much. I will see you tomorrow. Peace out.